Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now with JPMorgan with his leadership in fixed income is Bob Michele. Why is the bond market so calm? I look at SOFR swaps recovering. I look at the 10-year real yield really coming in a responsible way. Why is the world turned upside down, except it appears bonds?
Before I answer that, Tom, I have a bone to pick with you. As a New Englander, you should know that New Hampshire actually has the highest quality black flies.
They do.
The more temperate climate, the lakes, vacationers and black flies go there by choice.
And now surveillance audible as well. It is widely understood that the black flies of Bowdoin are far vicious than what you see in the burbs of Colby. There's just no question about it. I was once in a car. This is ancient history. I got out of the car. The flies were so bad, we just got back in the car and left. Thank you for that vision of New England, Mr. Michele. Why is there a calm in the market, your world?
Because a couple of things have happened. The first thing that happened is the deleveraging passed through the system. The forcing of levered investors who had swap trades on, who were short Europe, long the US, all these other things got squeezed out of the system. It took yields very high, it steepened the curve, and then it was done. All the false narratives out there were proven to be false. The thought that foreign official institutions were selling treasuries was just nonsense. When you looked at the Fed's custody data, they actually increased their position. And then you had some blinking. You've had a couple Fed officials acknowledge that, yes, they have a dual mandate, and if something happens in the employment market, they'd be poised to step in. And you had the administration coming out saying, hey, you know what, we're open to talks and we're looking to negotiate. All of those things created calm and now have created a reversal in the bond market.
What's the bond market saying about this U.S. economy, Bob? I keep hearing strategists coming, or economists raising their prospects and their odds for a recession. What's the bond market telling you?
The bond market's telling us, watch out. As things stand, if the tariffs go through as they're currently spec'd out, the 90 days passes, and there's only some moderate compromise, the U.S. is going into recession. I think our economist, Mike Ferroli, has made that clear. He's got the back half of this year at minus 0.5% real GDP. When you look at things like TIPS break-evens, they're down below or right around 2%. They're not at the 4% that everyone's talking about where inflation is going to be. The market realizes that a one-time price reset in inflation will kill top-line demand, aggregate final demand, and we'll go barreling into recession, and then all the pricing will fade.
So does that suggest in the fixed income market, I really don't want to take much credit risk here today? I want to stick to the Treasury market and clip that coupon?
You can take good quality credit risk. I've heard a lot of people come on and say, no, you've got to be high quality. We're at the top of the capital structure. If you own any equities, then you should be owning the debt of the companies that you own. Mm-hmm. And a lot of them are below investment grade. The key is to find companies that can actually make it through a period of taxation with higher prices on their input costs and then some loss and demand destruction in their sales. There are a lot of companies in the investment grade space that will be fine. There's no worry there. And the majority of the high yield market, 97 plus % of it will be fine.
Okay, I'm going to go here because I know you're an expert in it. Folks, they did mark to market because that's what you did in the 19th century. And they said FDR down in 1938 and said, this ain't working out. And we changed measuring everything every day, every Friday, every moment on Wall Street. It went away. And then we brought it back, and we had the same challenges within the banking system. Should we be marking to market private equity and private credit, or did they get a pass in the Bob Michael world?
I think there's a shadow system there that does mark them to market. And I think this is going to be highlighted this year because, as you well know, there are an awful lot of plans who have expenses to pay. Maybe you're a pension fund, you have retiree benefits. Maybe you're an insurance company, you have claims to pay. Maybe you're a university endowment and you've got to run your school and your funding's been pulled. And now you're looking at your portfolio. What was in alts and illiquid seems not to have moved in price, and everything in the public markets at one point was down 5 to 15, 20%. But the only thing you could sell was what was down. I think you're going to see, one, some rebalancing, and two, some calls about greater liquidity in that space.
Paul, this is really important. On radio, you don't see this, but on YouTube, cardinal rule of thumb, when a global Wall Street leader puts their hands up and starts measuring things, that's when you lean forward and really listen. How big's the haircut? Can you estimate for us blended private equity, a given institution? How much? What's the hit going to be? I got a number in my head.
Yeah, the numbers that have been thrown out there are around 15%.
Yes.
But there is an awful lot of capital that's formed that's gone into the secondary space. So I don't think there's going to be anything near that haircut. I think a lot of capital is there, dry powder. It will absorb it. I know in the private credit space, we look for opportunities in secondaries, and it's very competitive.
Well said.
Yeah.
It's Friday. The general counsel for JPMorgan's not listening.
No.
It's good.
I'm chilling out on a Friday.
Yeah.
Getting ready.
I want you to talk, Bob, and certainly every report we've had at Surveillance is liquidity's in order, the plumbing's in order within the American financial system. Where's the leverage, the shadow of leverage out there? It amends every 10, every 15 years. We move to a new leverage. What's the new leverage out there you worry about?
Well, I think where some of the marginal funding has aggregated is clearly in private credit. If you go back to 2007, I don't really recall much in the way of private credit, except if there was some sort of debt exchange or something like that. And today, estimates are about $2 trillion. So it's come from nowhere to something big. When we look at the size of the entire U.S. banking system, the commercial and industrial loan book, Paul, you will be able to educate us
Yes.
on that, what that actually is. It's $3 trillion. So that's $2 trillion in borrowing that might have historically gone to the public high yield market, the broadly syndicated loan market, or to banks. When we look at the public high yield market, it looks very clean. Even in a fairly meaningful recession, think greater than the Feroli minus 0.5% for a couple quarters, something closer to 1%, we can only get default rates up to about 3% in the public high yield market. And we know there will be more pain. We think that gets felt in private credit. Now, it remains to be seen whether that can all be dealt with behind the scenes, but it feels like we're about to approach the long-awaited shakeout there.
Hey, Bob, Tom and I were just talking to Megan Graper earlier this morning. She runs debt capital markets at Barclays. If she called you up today and she had a new issue in the investment grade market, would you buy that? Are you open to that, given all the craziness that's going out there in the world?
Absolutely, 100%.
Nice.
Because,
all right, Megan, pick up the phone.
Because don't worry, I'm sure they have.
Yes.
Corporate America is going into this in really good shape.
Okay.
Profit margins are very compelling. Actually, consumer balance sheets are in pretty good shape too. So businesses and households can withstand some level of pain on tariffs. And investment grade companies, we're not all that worried about. And generally, these new deals come with a bit of a concession. We have to know what the company is, what their industry looks like, where are they issuing, all the usual credit research things. But yeah, we're buying.
The president, just making comments, these were taped comments, folks, an hour ago on his way to Rome and the funeral of the Pope, gave us presidential statements on negotiations. Everything's wonderful. I think he literally said it's going to be a wealthier nation. The rest of America's turned upside down here, worrying about shipping arrivals in Los Angeles and that. If we, almost on a Hayekian basis, if we clear the market, Bob Michael, is it just like it used to be? Do we go to something new here within American Wall Street? Or do we, if we clear all these troubles, do we go back to what we knew? What would, Paul, deep into January?
Yes,
I mean,
exactly.
Do we just revert back to what we knew?
So we're in an interesting couple months here. As I was listening to Lisa talk about the bottom of the capital structure, I think they're called equities. I'm not entirely sure.
Shade.
One of those markets was up a couple tenths. I think the NASDAQ, those specious companies. We're in a period of a couple months where we should see good news, where we're in that 90-day delay on tariffs, that pause. You've already had the administration come out and tell us good things. Negotiations are underway. There are paths to compromise. We're working things out. You've got the Federal Reserve out there telling us, yeah, we're keeping an eye on the labor market. And you've got Secretary Bessent out there saying, we've got this. There are a lot of things we can do in the Treasury market. So all of those things are calm, which didn't exist a couple weeks ago. The second thing is it's too early for the hard data to turn. And we fully expect, unless there's a meaningful rollback on the tariff policy as it sits now, then the hard data will turn. But for now, the next couple months, everything looks to be smooth sailing. I think you could retrace all of the sell-off of March, April.
Thank you. I'm glad on a Friday we got to be. I think I can get through the weekend.
I didn't expect to be positive myself.
One final question. I am so honored to ask you this. With Pennsylvania classics, including CLST 0014, Rome and America, we will have a funeral this weekend in Rome. I have stood in Santa Pudenziana Church, 313 AD, built on Roman ruins, and it was literally where the Pope slept before they built 2 or 3 churches before St. Peter's. Link in this thing that we have within the Catholic Church back to biblical times, back to Roman times. How do you perceive the Catholic Church back to what you studied at Pennsylvania?
Well, that's way outside of my level of expertise. I will tell you, I've been to the Vatican a couple of times, and I'm always impressed. And I do see the classics everywhere. I see the Romans laboring away, constructing a city. It's just spectacular.
Bob Michael, thank you so much. What he really is going to say is we're going to get a 58-page annual report letter from the new Pope, just like we get from Mr. Diamond. Mr. Michael is at JPMorgan.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Without question, the most important conversation of the day for global Wall Street. Let me describe Mr. Adams to you as we talk of this moment in American history. He is a student of American history out of the University of Kentucky. His public service to Bush Sr., his many public services to Bush Jr., into a legitimate lobbying effort in Washington. And he is the banker's lobbyist in Washington. He's a president, the chief executive officer of what is called the IIF. And the other day, he had a modest conversation with the Secretary of Treasury. Tim, just as a general, thrilled you're with us today from the meetings in Washington. As a general statement, how scared is global Wall Street? How scared is Manhattan Wall Street of this moment in banking?
Sure, Tom. Thank you for that intro. It's the best intro I've had in a long time. It's such an honor to be back on your show. I listen to you every day. Look, people are worried because of just the enormous uncertainty and the daily changes that are coming out of Washington. Although I will say this week was a breakout week for Secretary Bessent. I think he really established himself as the anchor voice in this administration, a sober voice of reason. And I think the time that the industry spent with him this week was a calming experience. And I think if the administration and the White House will let Secretary Bessent get out on the front more often, I think that would help our industry, and I think it would help markets.
Okay, I'll go with you there, but basically what they did, they put a cork in the mouth of selected other Trumpites. Let's say we continue with the cork in the mouth. That's great. Bessent has to talk to Trump about what this nation needs. First thing Paul Sweeney said this morning, Mr. Adams, is shipping in Los Angeles is off a cliff. How far off a cliff do your bankers see the American economy?
Yeah, they're very worried. Obviously, the soft indicators of what we've seen initially, I think about Q3, Q4, you're going to see real indicators show that the real economy is beginning to slow. The workers that this administration say they want to help, real manufacturing factory workers, are going to get hurt. It doesn't need to happen. I think Secretary Bessent's, again, sober voice of reason. I think if the president would listen more to Scott and let him lead on these discussions and really put in place a thoughtful policy, I think we can avoid the worst. But right now it hangs in the balance.
Tim, you're down in our Washington, D.C. bureau as we speak. You've been in meeting with some of the folks from the IMF, which has been in Washington this week. What are our global trading partners, what are they telling you these days?
Well, first, there was a sigh of relief this week when the United States, and articulated by Secretary Bessent, agreed to stay in a leadership role in the Bretton Woods institutions, the IMF, the World Bank, and other IFIs. I think there was some concern that the U.S. was going to pull back or downsize or try to undermine these institutions. But what we heard from the Secretary was a reaffirmation of not only the U.S. Belief in these institutions, but they want to play a leadership role. They want to get back to factory settings. I get that. I actually agree with it. So I think a reaffirmation. The second is just the uncertainty over trade and tariffs, and that's really creating turmoil around the world and enormous uncertainty about the trajectory of growth.
Tim, again, when you talk to your counterparts in D.C. and the IMF and all our global trading partners, is there a sense that globalization, as kind of we've grown up with the last, I don't know, 30, 40, 50, 60 years, is that over?
Well, it certainly feels like we're moving into a new chapter. I actually think globalization of the last 40, 50 years improved a lot of tens of millions, if not hundreds of millions of people globally, and I actually think it was good for the U.S. economy. But they had that discussion in the last election. Let's move on and figure out what does the next chapter look like. And I think we want an outcome that works for the United States and works for others. Alliances and trade still matter. David Ricardo taught us that 250 years ago. We just need to stay true to the lessons we've learned over time. But I understand that the U.S. wants a better deal from some countries, including China. I get that. Let's move on to that, resolve that dispute, and then get back to basics.
Tim, you mentioned China, and obviously that's a huge trading partner with the United States. Any sense of kind of what the administration's strategy is as it relates to China at this point?
Well, so far it's been to try to isolate and bludgeon a bit. I've been going to China for 30 years. I don't know that that's going to work. I understand that the president believes in his strategy. He's certainly a history of negotiations. So we'll see if it works. I think you've got to find carrots and sticks. I think that you've got to build an alliance, and I think you've got to treat China with respect. Trying to bludgeon them to come to the table hasn't worked in the past. I don't think it's going to work this time.
Tim Adams with us, the IIF, after his conversation with the Secretary of Treasury. Just a terrific perspective, not only on our banking industry and the people he represents with the IIF, but also, of course, with his Kentucky and the Republican Party. Tim Adams, let me shift gears with you right now. And this is going to go out of your sense of Kentucky. Cassius Marcellus Clay started a Republican Party a few years ago in Kentucky out of the Civil War. And it was an old style Kentucky party. And then it goes on to what you lived with the Bush family. There was a certain character to a Republican Party at Walker's Point in Kennebunkport. That's been blown up. Just look at the Oval Office with the gold and I probably think got Tim Adams' portrait up there and all the rest. Tim Adams, what does the old Republican Party do? Do they vote Democrat? Is there a third party here? What does your Republican Party do in the next 4 years?
Well, if you remember Bush 41, who I worked for, I was a young White House staffer, talked about a kinder, gentler country, and I think that's true. And I had the honor working for Bush 43 as well, and they believed in real decorum. Look, I think there are a lot of people across the country trying to figure out which of the two boxes they fit in. I just would like to find a party that wants to be pro-growth, pro-business, pro-capital formation, pro-risk-taking, that believes in trade. As I said, we've got 250 years of experience that trade actually makes us wealthier.
Right.
So that's what I'm looking for. And, there's no reason why the Republican Party can't offer that, or the Democratic Party. Right now, I think the Democratic Party is a bit lost, but there's an opportunity to reinvent themselves.
Bessent of the Treasury worked for Soros years ago. He seems to be able to work with everyone. Marco Rubio, I would suggest Tim Adams is someone IIF and the bankers can deal with. He's a more traditional Republican. In this Donnybrook run, look at the Economist cover this week of the Bandaged Eagle. Tim Adams, are you looking to Secretary Rubio and Bessent for leadership to help the president get back to where we were?
Yes, absolutely. And look, you've got great leadership on Capitol Hill. Chairman of the Financial Services Committee, French Hill, I spoke with this week, known him for 30 years, also that way. Bill Haggerty, Dave McCormick. There are people on Capitol Hill, there are senators and House members that I think also believe in engagement, free trade, and just capital formation and growth. We need a pro-growth strategy. Yeah.
Paul, I got 8 more questions.
I know,
jump in here, Paul.
Exactly.
Tim and I are going to start talking about Henry Clay in a moment.
Exactly.
Paul, save us.
Hey, Tim, talk to us about regulatory policy here. How do you think this administration is kind of just viewing how they want to regulate U.S. commerce? I mean, there was a belief at the election that this is going to be a pro-growth administration, maybe a little bit light-handed as it relates to regulation. How do you think that's developing here?
Yeah, I think they do. I think philosophically that's exactly where they want to go. Now you have to do it on a sector-by-sector basis, and we're seeing in the energy sector a real push, as he said, drill, baby, drill. Let's find ways to increase oil and gas production. Yeah, on top of the U.S. being already the largest oil producer at 13.2 million barrels a day. So I think that's true. On financial services, they're finding their way through. I think we'll get to a good point. It really depends on the sector. I do think they do want to focus on deregulation.
Tim Adams is the new method of communication for bankers, not through Tim Adams IIF, but they have to appear on Fox TV because that's what the president wants. Is that what we've become?
Well, Jamie's a unique individual, and he's a larger-than-life figure, and I think he's a great voice and a great face for not only the financial service industry, but for industry generally. I think it was a brilliant move of him to go where he knew the president would be watching. And so I'm a big Jamie fan. I think all of our voices need to be heard in a variety of places, including Bloomberg. You are such an important medium. So we're all out there every day.
He's just looking for Red Sox tickets. Tim, I look at this, and again, there's the international component. Please tell me what the European bankers, through the IIF, what they observe in Washington.
Well, look, they want to know where financial regulation is going. The Basel process, the Basel III, we've been working on for 15 years. Is there some resolution? Is it coming? What does that mean? And what does it mean for Europe? But I'll tell you, this Trump shock, I think, has been a wake-up call for Europe. I actually think there's an opportunity for Europe to seize the moment and put in place policies that will create capital formation, job creation, and they can grow. They certainly need a defense and industrial base, a security industrial base. Europe's moment is here. Can they seize it? I don't know. But what I heard from this week from European officials, they know it. And there are some here that want to move forward.
And Tim, I mean, along those lines, I think a lot of folks feel like, okay, Germany can certainly step up and make those types of investments. Maybe even Poland, I've heard, because just given their geography relative vis-a-vis Russia. But how about the rest of Europe? I'm thinking, Italy, Spain, Portugal. I mean, what can they realistically do in terms of investment in their infrastructure and their defense?
Well, you're right. Germany, after decades of dormancy in terms of a new investment, is ready to spend. I think the Chancellor Merz will take over May 7th. Right. He's got a great vision. I was in Warsaw 2 weeks ago. As you said, Poland is really a great intellectual leader in terms of growth and capitalism. The Baltic states, the Nordics, met with Spanish officials yesterday. I think Spain has an enormous story to tell. Rapid economic growth in Spain. And so there is some upside. Many of them have fiscal challenges. They have large debt to GDP. They have large deficits, so they've got to work through fiscal. But I think there's an opportunity for a mindset that the private sector, not the public sector, the private sector can play a growth leading role.
Tim Adams, Kentucky rebuild to beat Paul Sweeney's Duke. I mean, can Mark Pope get it done at Kentucky so they finally wallop Duke?
Well, you know, we beat Duke this year in the regular season.
Yeah.
It was a big win for Mark Pope. I think he's got a great team he's going to put on the floor next year. I like him. I think he's a real deal, and the players like him as well.
Tim Adams, generous of you to spend this time with us this morning. He's with the IIF, and of course that really important conversation with Secretary Bessent here a few days ago, which truly moved the markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Filmmakers in the Full Frame Documentary Film Festival. That's a course at Duke.
At Duke, and parents pay good tuition
that
for that.
pays you to study duration and convexity.
But somehow she's made a good career. I don't know how she did it. Megan Graper joins. We really appreciate her coming into our studio here. She's global head of debt capital markets at Barclays. Megan, thank you so much for joining us here. If I want to fund a leverage buyout in the debt capital markets, can you do that for me?
We can. In fact, I think there are signs of life in the investment grade world in particular. Okay. A market that seems reasonably unshaken relative to what we're seeing play out in other asset classes.
Yeah.
And part of this is tied to, I think, a reopening of the market. You need to see supply to beget supply. And there is confidence and cash to be deployed. And so the supply-demand imbalance, I think, helping drive that.
Let me get to the soap opera right now. And Rubenstein, Duke, there's no selling of private equity, private debt. They can cool, calm, collected. Other institutions are selling private equity now. Discuss. What's it mean from your desk?
It means a cash rotation. And so there's ample liquidity. You can see it in the order books we had this week. So we've had a functional new issue market. You saw, a Kinder Morgan deal with $17 billion of demand this week. Walmart topping $21 billion. We did a deal for the Republic of Austria in Europe, $63 billion in demand for a $7 billion transaction. So cash is gravitating to safe havens.
I hate you. She doesn't know I bought the Austrian 100-year. At the top of the market, it went down 74% at some point.
Oh, Lord.
What are your clients telling you these days, Megan, when you talk to them, if you bring a new issue to the market? How do they feel about, are they asking for more return? Are they asking for tougher covenants? Are they concerned about just the world in general? Or is there so much money on the sidelines that they're just throwing it at your issuers?
I've yet to see an investor that would say they're bullish here. Okay. So that is the challenge. I think, ultimately there is a amount of cash coming into investors' hands that needs to be redeployed, and they are looking for safe harbors. Investment grade is proving to be that. You've got $400 billion in coupon income and the wall of COVID debt maturing. So even as we keep monitoring these Lipper data outflows, which certainly need to be scrutinized, I think they're indicative of sort of psychology of market and sentiment. There is a willingness and there is opportunity that volatility is presenting in the long end of the curve and with yields that are now, upwards of 6% without having to take a lot of credit risk.
I guess your world has kind of readjusted to, a 10-year at 4.30, that type of thing, as opposed to years, for 15 years, we had no interest rates. Have issuers and investors kind of said, okay, this is the new normal now? This is actually what a normal capital markets and the debt side looks like?
Yeah, no, it's picking and choosing your spots on the curve. So that is certainly a choice. I think for investors, the underlying yield is what's fueling the bid. So you're talking about, some of the highest all-in yields that you could achieve in the long end of the curve, upwards of 6% for a single A long piece dated debt, and in triple Bs it's closer to 6.3. So, but on the issuer side, they're looking at spreads. They're still at all-time tights. So we've seen a 10 basis point retracement in credit spreads this week, which just tells you that, there is money pulling in at a time where, yes, credit spreads are 25 wider on the year, but underlying rates in the front end of the curve are 40 to 50 lower. So your all-in cost of funding actually isn't materially worse than you were at the start.
You're too young, but did your dad or grandpa, did they show you the S&P Blue Book?
We were a medical family. I was standing over my dad in an OR doing cardiac surgery procedures. So finance was another world from that medical
Lisa,
background.
would you hand her a Tang mimosa? Maybe we'll get Megan Graper through this. Megan Graper with us here in your commute across the nation. Good morning, worldwide, and particularly to the continent of Europe in your afternoon on YouTube. Subscribe to Bloomberg podcast. Okay, in the equity zeitgeist right now, institutions, not Barclays, total panic. Everybody's doing this, doing that, and retail's buy the dip, keep it going. Is there the same retail institutional dichotomy in fixed income?
Well, the one thing we've been monitoring is that 22% of investment grade credit is owned by non-U.S. investors. And so the fear factor, particularly as we looked at some of the moves in the bond market, and the suggestion was that maybe we were seeing investors pare back. That's in fact not the case as we look at investment grade.
Bloomberg says that's not happening.
It's not happening. You can see it in the rate auctions. We just got the allotment data for the April auctions. So 10s and 30s actually saw a month-over-month increase in terms of foreign participation. That's true in these new issue order books as well. So we are bringing deals to market. That 22% holding is still, there's no shortage of demand from Asia, from the Middle East, and from Europe, helping to underpin some of these functional markets.
How do you compete against private credit, or how has the private credit market impacted your business?
I mean, private credit is a bit more opaque, and it does feel like more of a bespoke market. And so if you're an investor in this day and age, what's difficult in the secondary market, why everyone takes their lead from the primary, is you're in good company if you're in the new issue market. You're not a singular investor making a singular decision. A lot of private credit is actually more finite number of players helping to drive activity. If you're alongside 150 other accounts in a $20 billion order book, you're feeling more confident that at a market that's difficult to think about where is fair value, if you're alongside a multitude of other savvy investors, you're feeling greater conviction about fair value.
David from Camden Yards emails in. I'm kidding, folks. But if you were to talk to Mr. Rubenstein right now, are the endowments too locked up in alternative investments, esoteric alternatives? Should they be looking at the joyous liquidity of Megan Graper at Barclays?
I think we're seeing that rotation happen. So if you're looking for safe haven trades, particularly in the front end of the curve, it's an easy place to find a cash surrogate and wait for more sustained stability. Because even if there's incremental deal making out there, the risk is that this growth landscape is going to contract, particularly as we move into the second half. So it's a good place to sort of park cash and wait things out, and still, without taking much credit risk, pick up incremental yield.
The movie of my childhood was David Lean, Lawrence of Arabia. I mean, it was jaw-dropping as a kid. What was the movie of your childhood that made you do film at Duke?
Well, I started out as a documentary filmmaker, and so it was really more evaluating and critiquing different personality types, which is actually somewhat apropos as you think about trying to evaluate different investors and issuers and how they're approaching markets.
Did you see Z, the Greek movie?
I have not seen that. What is that?
Z, it won every Academy Award. Like 1970, 71, it was this incredibly, it was before documentary. It's this incredibly violent movie about one of the Greek revolutions.
All right, I'm
Check
on
it
it.
out. Very cool. Z, just the letter Z.
That's like a John Tucker reference, Lisa. It comes out of nowhere.
Something to watch on an international flight.
Yes. Are you based in New York, or does Barclays have you with a British accent in London?
No, I'm based in New York, but I'm all over the globe. I was in Texas yesterday. I'm flying to Switzerland on Sunday.
What'd you learn in Texas? What'd you learn in... Did you talk to Michael? They're going to move the New York Stock Exchange to Texas?
Well, there's a decent amount of conviction that there's sort of ample opportunities for high quality names where fundamentals are in good shape, and where they have access to markets. Right. So it's a tale of two cities. There's definitely issuers that are cash rich and happy to sit this out for a period of time. Right. Some of our pipeline has moved to late Q2, Q3. Okay. There are others though. There's a $35 billion backlog slated for next week. So we're going to build on the momentum we saw this week with $25 billion getting done. $25 billion getting done at new issue concessions that are 3 basis points, with oversubscriptions that are upwards of 5 times.
Megan, thank you. Awesome. Megan Graper with Barclays, driving all their credit market work.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is like, Leslie's in, and we're going to talk about liquefied natural gas, and all of a sudden, it's like, okay, we'll do it, and it's interesting and all that. She's with Energy Vista, and we're going to look at liquefied natural gas, and it liquefies at negative 230 degrees Fahrenheit, and the equation is C2H6 or something. I flunked it in chemistry. I'm sorry. Except you're the most important interview of the day.
Oh, good to know.
All of a sudden, your world is front and center with U.S. China, U.S. Europe. So the boats go to China, but your boats with LNG may turn around and go to Europe. Do I have that right?
So they already stopped flowing to China since February, actually, both for economic reasons and the 15 tariffs that happened at that time. But we've seen that China has used its retaliation from the beginning. Its geopolitical lever that it has on US LNG from the beginning. Same as last time, like the first trade war, China has stopped importing US LNG for a couple of months until the trade deal happened, and then they spiked their imports of US LNG. So I think that China is using its coercive diplomacy, retaliation right now, but a deal is still on the table.
I should say Leslie Paulty Guzman. I didn't introduce her correctly. Paul's putting me in the timeout chair. Leslie Paulty Guzman with us from Energy Vista. Paul, this is a big deal.
It is. And how do you think, when you think about the global trade here, we're talking about tariffs with so many different countries and so many different products and services. How does the energy industry think about a world where free trade may be on the decline?
Mm-hmm. So, Paul, let me ask you a question. What's in common between Alaska and shipping? So they were both mentioned in the speech of the State of the Union earlier this year. And this is the card that South Korea can play. So all the countries right now, they are looking at all cross agencies, cross sectors, what they can come to the table with the US.
Right.
And infrastructure, shipping is going to be big on the table, and South Korea has a competitive advantage here. And they can buy also more US LNG imports and potentially from the Alaska project that everybody is talking about.
Basic one, an LNG ship that's not going to China, can it go through the Panama Canal? Can they fit through the Panama Canal?
Yes, they can, but all 2024, most of the LNG tankers from the US have avoided the Panama Canal because of the bottleneck, rerouted around the Cape of Good Hope.
Oh, man.
But it made more sense anyway, economically, to send it to Europe. And Europe was the largest market for US LNG.
Where does it come out of the East Coast? Is it Gulf of Mexico?
Yes.
Gulf of America?
Yes.
Sorry. Where's the major LNG depot that's going to take all this to France?
Mostly in Texas, Louisiana, all around the US Gulf Coast.
And where do they go, Rotterdam, or do they go to France somewhere?
They go to France, Belgium, the UK, Turkey, all along the Mediterranean, the Netherlands,
so
Germany.
What's Secretary Bessent going to do with this, with your world of LNG?
So I think that it's a logical avenue to play this card because the US wants to sell more of it, unleash the American gold, and Europe needs it right now to keep Russian gas and LNG at bay. And so there is a common ground of understanding here. And US LNG, yes, the permitting barrier has been removed, but US LNG still needs to be built if new projects come along. And the financing is really challenging for this new project. And the US needs to sell. If there is no market, there is no exports.
But don't we, I think about liquefied natural gas. I came to understand the importance of it when Russia invaded Ukraine, and that shut off a source of energy for Europe. And so the U.S. liquefied natural gas became so much more valuable and so much more important. But isn't the problem in the U.S. is we don't have necessarily the pipelines to get it to the ports in Galveston or wherever we need to get it to?
Yeah. So you're raising an important part of the equation that infrastructure in the U.S. more infrastructure needs to be built on the pipeline side. So it all depends what is the source of the gas for this LNG. Is it associated gas from oil production or it's dry gas? That will be important in the future.
Well, I got 20 seconds. Michael Barr's chomping at the bit. As clearly as I can, an LNG tanker is 2 football fields and there's only 25 people on board?
No, I don't even know exactly what's the crew, but I can give you another data point.
Please.
How many US flagships do we have?
Like almost none, right?
Exactly.
Exactly.
I think we have only one new one that recently dropped a cargo in Puerto Rico. That was like the only recent ones that we had. And globally speaking, 80% of the trade is on the ocean. How many US ships altogether that we have? Only 80 that can do global trade.
This is great.
Yeah, so
I've learned more. I've learned more
like-
in 7 minutes with Leslie
I know.
Guzman and the whole thing. Can you come back?
I can come back.
Thank you, Leslie.
Thank you for having me. Yeah.
Leslie Guzman, Energy Vista.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Perfect for my beverage of choice. Lisa was out on YouTube on the live chat.
She was?
Selling the newspapers.
Oh.
Something that we're going to get to it, not now, but something about ice cubes. Lisa, what do you have?
You're going to love that. Okay, first I want to start with, we've been talking about so many companies, right? Industries being affected by China tariffs. The Wall Street Journal is pointing to another one. Baby strollers and baby products.
Saw this.
Not in
I'm
the market.
sorry, producer Eric. I know he's definitely in the market. The problem is that there are strict product safety standards with that the U.S. government requires. So products like shoes and clothing, they're not regulated as closely as the baby products. So you have companies that are looking for places where they can get, one, the products, but two, also meet those regulations. So that's why a lot of them are turned to China. So to give you an idea of the impact, today, 95% of imported strollers come from China. I did not realize that.
I did not know that.
3/4 of toys and infant furniture like cribs come from China.
Why is this a surprise? We know this.
I did not realize it was 95%. So the question is, right, how much more is it going to cost me? So you have these strollers that are like $900.
Oh, please.
So you could tack
No,
on.
stop. Giuseppe has
The fancy one.
Giuseppe has the Dior bassinet and stroller combo, which is $7,000.
All-wheel suspension.
That's all. One of the in-laws bought it. I think it was her in-law. Her parents bought it. What a racket! Come on.
It could go up
Strollers-
$400 more. Can you imagine?
Back in the old days, strollers you picked them up at Walmart for $49.
Exactly. We had
The umbrella strollers.
We had the twin strollers for our twins.
Oh, okay.
Yeah, we had the side by side and the front and back, depending upon where we're
did
going.
we?
That's a
Yes.
big investment.
Yes.
Did we?
Yeah. They're 29 now.
Next, please.
Have either of you used ChatGPT? Have you used it, engaged with it at all?
I've seen it. Joe Weisenthal.
No.
Okay.
I let Weisenthal do
Well,
that
if you do, the
stuff.
question is, do you put prompts in there like please and thank you to ChatGPT? So if you do, it's like an etiquette question, but it's also a money question because apparently it costs money just for that little extra prompt. Sam Altman, he's the CEO of OpenAI, he talked about it because someone asked him on X, how much money is OpenAI losing in electricity costs from people adding just an extra please or thank you? And he responded, tens of millions of dollars, well spent though. He said, you never know. So the reason, and this is really what, because New York Times, they spoke to experts, they say every additional word in an ask increases the cost for a server. So it involves like electrons moving through transitions, very, deep, and that needs energy. So that's the whole thing. So if you add an extra thank you, it tacks on extra money, but you're also being kind at the same time. So it depends.
I think when I was in college is closer to Benjamin Franklin
Yes.
than it is to now.
I know.
Remember the stacks?
Yeah.
And you couldn't stand. You were
No.
talking about Boulder earlier. In the Colorado stacks, I think it was Baker. I can't remember. You couldn't stand up. The floors, and it was musty and paper and incense and other things besides incense.
I've mastered Google. Can I stop there? I'm all
I'll
over
give
the
you
Google.
yes,
Okay.
you can
Next.
stop there. Okay, so if you're enjoying a fancy cocktail somewhere, maybe on the Jersey Shore, maybe in Rome, maybe you're enjoying the.
Exactly.
I
I'll be at
love
the
it.
Swan Tavern tonight. Eat some
Would
beer.
you? Here's the question though: would you pay an extra $17 for an ice cube from Greenland? Because a lot of people are doing it.
Why?
Okay, entrepreneurs, they're heading to Greenland. They're harvesting all the ice
That's what
because
President Trump he sees.
that's
upside
the reason
in ice
behind it.
cubes.
There you go.
All right, I get it now.
They're marketing it. They're saying it's cleaner, it's denser, because it's been compressed in a glacier for like 100,000 years. Whether science backs that up, it's up for debate. But people are paying $100 for 6 ice cubes. It's crazy. There's also vodka being made with glacial melt water on top of it. So it's growing. You have the government kind of approving about 13 licenses to certain companies to do this, to harvest it.
Let's cut to the chase.
Yes.
We go to surveillance Tito's expert, Paul Sweeney. No sugar in Tito's, right?
I don't know. It's Austin, Texas.
Yeah.
How come you and I can't come up with a tequila like George?
Yeah, exactly.
That's
But I'm not paying $100 for an ice cube from
Lisa Mateo, thank you so much.
Where she finds this stuff, I don't know.
Today.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.